So my name is Andrew Thake. Welcome to today's 5 at 5 show, which today is sponsored by Ion Energy and Manitou Gold, and is brought to you in association with the Resource Global Network. The 5 at 5 forms part of our Minds and Money online global June event, running the 22nd to the 24th of June, for which I'd like to thank our lead sponsor, Trade and Investment Queensland. For those of you who are attending 5 at 5 for the first time, the aim of 5 at 5 guests at 5 p.m. is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. To make the sessions as interactive as possible, you can either ask a question in the chat box, which is in the box at the bottom of your screen, or you can wave your hands via the invite participants function. My colleague Kelvin will unmute you and you get to ask your question live. We'll also be having polling questions throughout the webinar where you can vote. So for today's show, we've got a great line of guests. They are Ali Haji, Chief Executive Officer of Ion Energy, Richard Murphy, Chief Executive Officer of Manitou Gold, Chris Berry, President of House Mountain Partners, and Philip Hotwood, who's Principal of KWR Capital. So just to get things going and get you all sort of interactive and participating, I think we have our first polling question, which is going to come up on the screen now. And if we just hear it, it's what is your outlook on lithium? Are you very positive, neutral, negative, or very negative? And we'll be returning to that poll later on in this show. Whilst you're voting, I'd like to turn to our two investor guests to pick one news story in the mining industry that has caught their attention over the last week. So firstly, I'd like to turn to Chris Berry. For those of you who don't know Chris, he's been an independent analyst since 2009, focused on energy metals supply chains, including lithium, cobalt, graphite, nickel, copper, vanadium, and rare earths. Chris is president of House Mountain Partners. Chris, what news story has caught your eye this week?
Well, first of all, thanks for having me. I think this is my second time doing a 5 at 5, so it's great to be back with you and with everybody. I guess, you know, just in the last week, one of the things that's really jumped out to me is the amount of capital that continues to flow into the battery metal space, almost regardless of where pricing is. This is on the upswing. Has it flatlined? You know, a news story in particular that crossed the wire probably last week at this time was the fact that General Motors has now committed to spend $35 billion on electric vehicle and autonomous vehicle development, basically redefining their whole business. And what's interesting is they had originally I think agreed to spend around $20 billion by 2025. They've upped that to 35. And this is all money that's going to be allocated allegedly by 2025 in the next 4 to 5 years. And so, you know, I'm encouraged because what's happening, I see in the battery metals, it's not just sort of a Chinese or it's not just an Asian story anymore. It seems like as the supply chains start to flesh out and get built, and in some cases rebuilt in the wake of COVID and in the wake of the US-China trade war, clearly, you know, there is an enormous amount of capital that is going to be deployed. And I think one of the reasons why General Motors has made this commitment, in terms of the size that is I think they've probably realized that, look, we can't just make the cars, right? And assume that the consumers will be there. What is probably dawned on them, I would assume, is that security of supply of the raw materials and also owning the IP and owning the technology around batteries is really important for the company as it grows and shifts its business model. So, you know, a little bit of a soapbox rant here on you know what I'm sort of seeing out there, but I'm very encouraged by both the size of the checks, quite frankly, that are being written in the battery metal space, and also who's writing them. Because again, this is not some, you know, large Chinese company that's doing another offtake agreement. This is a major Western automotive manufacturer that's committed to this shift. So it's pretty encouraging.
And bringing in our second investor guest, just for those of you who haven't met him before, he has over 30 years of professional experience, and during that time, Phil Hopwood has worked in the mining and metals industry for clients in Australia, China, Singapore, South America, Canada, and the US. He has developed and led significant thought leadership in the mining and metal sector, and is a regular speaker at industry conferences with key focuses including M&A advisory, business transformation, and value extraction from technology. As I mentioned earlier, he's now principal of KWR Capital. If you had to pick a news story that's caught your eye, what would you pick, Phil?
So there's a couple. There's two or three things that I've kind of been following this week. So from a geopolitical level, I've been watching what's been going on in Peru with the elections there, and kind of just trying to think through, well, what does that actually mean for any particular investment going on into Peru, which is one of the largest, producers of copper that we have. I think that's that's very much an evolving thing. That I thought it's interesting, that article that would have seen, no doubt, in terms of lithium seawater extraction. How will that impact lithium? If that is just a flash in the pan, or is that a real thing, or whatever? The third thing, though, which is the biggest thing that I'm following, which isn't really a story that's come out this week, but it kind of is. I mean, so we saw the gold price go down by about $100. We saw copper kind of go off by about 10, 15 cents or 20 cents, whatever it was. By the way, these are still really, really great prices. And yet I sit there and I look at P ratios, because, that's kind of what you kind of do when you look at investing. I look at P ratios and the like, and I look at market capitalizations and share prices. And I sit there and I kind of wonder, what world are we in these days, where some of our biggest mining producers, especially the gold sector, have PE ratios these days when they're generating cash that is like literally turning them to like literally ATMs, massive cash ATMs. The Barricks of the world, Newcrest Mining in Australia, they're generating, well, I can tell you exactly how much they're generating. Barrick's operating cash flow right now per month is over $5 to $6 billion, right? And their debt is 5. Now, that's not all free cash flow. I do get that. Yeah, okay. But that's a huge amount of money. And their P ratio is 15. Now, when I was a lad, P ratios for gold miners were 30 to 35, right? And the diversifieds were 12 to 15 maximum. But BHP now has a P ratio of 25, 26. So everything is out of kilter. And what that makes me think about all the time is, how do we attract more investment into this sector, right? And what are a lot of these companies doing that investors are failing or not wanting to invest in them? Right? And that is a question I have all the time for the mining companies in which we're looking at investing or talking to.
What is your answer to that kind of question? If you were to hazard a few guesses, what you think the mining companies could be doing differently?
Oh, there are several things, but one of them is that people just do not see a pathway with a lot of the mining companies to make money, right? I can tell you, a couple of months ago, I spoke to a mining producer who was producing, like even more money, because the gold price was a bit higher then, And I said, what are you going to do with this money that you are making right now? Because it's great. This is fantastic. What are you going to do with it? And what was the answer to the question? Well, they said, we're going to invest some money in capital projects, and we're going to do some M&A. And I thought, oh gosh, I heard that one 10 years ago, and that didn't go well. And I tell you, as an investor, what I want is, I would like to return that money to investors. Thank you very much. What are you going to do? And I get it, the M&A, and I understand about the need to do capital projects and the like. But at the same time, you have to have a pathway for investors to make money from investing in this sector. And if all you're going to do is show people geophysics diagrams and show them how great these ore bodies are, you're not going to get new mining investors into this sector. And they want to come into this sector, especially down in the United States. People want to invest because they see the money and they see the potential returns. But boy, they get so careful. They become so careful about this sector, and they get so worried that they're not going to get the money back.
Turning to your second news story, and bringing back in Chris Berry, the one on lithium seawater extraction intrigues me. Chris, obviously you've been following lithium for, I think, like 13 years now. Lithium seawater extraction. Is it a thing?
You know, it's been a thing for a long time, in the sense that I think, generally speaking, the technology is available, for lack of a better phrase, but it hasn't really been cost competitive in terms of the extraction and the production and ultimately the purification. I mean, you know, one of the things that a lot of investors, when they're new to, say, the battery metal space, they don't realize that, you know what, lithium is not rare. I mean, to Philip's point, yes, it's absolutely in seawater, it's hard rock deposits, it's in clay, it's everywhere. But extracting it, producing it at scale, and doing so to an increasingly tight battery quality spec is something that, you know, I think the lithium business in particular is really struggling with. You know, a company like Albemarle that in the good days, you know, with actually probably where lithium prices are right now, has 30 to 40% operating margins, generating lots of cash. And, you know, in many ways, I think Philip is probably struggling with a lot of the challenges in terms of, okay, well, how much do we invest? How much do we return to shareholders? And how much do we focus on, you know, building out our assets when lithium demand is growing at 20% a year? And that's sort of unprecedented. You know, there really isn't, with the battery metal space, there really isn't a historical analog to sort of look back on and say, okay, well, the last time this happened, here's how the industry shifted and grew. Here's how we embraced technology, and, you know, everything worked out really, really well. I think one of the other new, I'll call it a challenge, but, you know, perhaps an opportunity, depending upon your viewpoint, is ESG, and this idea that, okay, so lithium demand is supposed to triple in the next 5 years, and then arguably double again to 2030, putting it at around 2 million tons of demand by 2030 today, when it's around 350 to 370,000 tons. And this is all supposed to happen seamlessly. The capital is going to be there, no construction delays, anything like that. Oh, and by the way, we're supposed to minimize water use, minimize reagent use, not have any ponds, anything like that. You know, this is sort of this paradox and this tension with respect to green growth. We know we're going to decarbonize, we're going to electrify society, but it's going to take more of these raw materials, whether or not it's base metals like copper and nickel, or some of the specialty battery metals like cobalt or lithium. And so, you know, that is something that I think a lot of investors are, I don't want to say skeptical about, but curious to see how this is all going to work out. And I do think, coming back to your original question about lithium out of seawater, this is, you know, there are a lot of potential panaceas out there that people are hoping for, right? I mean, lithium from seawater, can we extract it at a low cost where it's plentiful and we don't, you know, harm the environment in any way or use reagents? Will recycling do the trick? Will all other alternative, you know, lithium production methodologies do the trick? I would say that they'll be additive to supply, but by no means will they, you know, reshape the cost curve or really solve some of these challenging problems. So it's going to be an interesting decade. I do think that, you know, extracting lithium from seawater, just to use that as an example, is a great example of a technology that should be researched and pursued. But right now, I think that, given basic technology and basic mining practices in the lithium business in particular, it really probably suffers from some challenging economics. But again, doesn't mean it shouldn't be pursued. It just means this is sort of the hand we're playing.
Okay, thank you very much. Then I might actually return to technology later in the show, but I think if we can just have the result of the polling question just up on the screen. I think if we just end the polling now, you'll see that very positive for the outlook on lithium was the winner, with 53% of your votes. So I think, without further ado, let's move on to our first mining update of the show. Whilst he gets his he goes and shares his slides, just to briefly introduce our first speaker. Our first speaker is Ali Haji, Chief Executive Officer of Ion Energy. He's also Director of Antler Hill Mining and Spirit Manitou Capital Corp. 13 plus years international experience, asset management, risk analysis and program governance, advisor to ATMA Capital Markets and Step Gold. He's now Chief Executive Officer of Ion Energy. So I guess an opening question to you, Ali, is Chris mentioned that he's seen money flowing into battery metals. Are you seeing the same at your end, and seeing the same at Ion Energy?
Yeah, absolutely. I think we closed a bought deal in April, and yes, money is flowing in. But I think as sort of captain of the ship, you have to be wary of where you get your capital and who you're accepting your capital from, in order to protect your shareholder and your company interests. But yes, the market is, for lack of a better term, hot. The demand is there for lithium. There are speculative companies that are receiving vast amount of capital, and that just is indicative of the market today.
Okay, well, that's kind of good to hear. I see that you've now got your slides up. We're really keen to have a bit of an update as to what Ion Energy are actually doing at the moment.
Sure. So I know I have 3 minutes, and I'll try and stick to them. Ion Energy, for those of you that don't know our story, is Mongolia's first lithium brine explorer. We hold about 81,000 hectares in country. That's our flagship license. We added on another 29,000 hectares thereafter. The team is made up of a proven in-country team that's had a vast amount of experience in country, but also internationally. We've commenced our exploration in October of last year, where we did geophysics CSAMT along with microseismic. And as of about a month ago, we've had diamond core rigs drilling on site at Bavayol. We will have a truck-mounted auger drilling and bringing up the brine samples that are encased in due course. So an aggressive exploration program underway at Bavayol. Urgaknaran, our second license, will commence shortly thereafter. For those of you unfamiliar with Mongolia, it's a country in which 20% of their GDP is made up by mining. So there's a lot of access to skilled labor in country. In fact, 100% of our staff in country that are currently operating are Mongolians with no expats. So it allows us to keep our costs significantly low. As you mentioned there, Andrew, the market has been relatively suited to funding lithium projects. And on the back of that appetite in the marketplace, we completed a bought deal in April that further funded the organization to keep us fully funded for the next 2 years to not only execute upon our exploration strategies, but also to ensure that we have enough capital to deploy for M&A. And I'm sure Philip's sort of cringing at that word, but we'll attack that piece later. As far as the team, Andrew, you mentioned my bio. Thank you for that. I won't spend too much time on this slide, but I will say that half my board is Mongolian, and I think it's important, irrespective of jurisdiction, to operate in that manner. My chairman, Matt Wood, is a serial mining entrepreneur and a geologist that has done work around the world with a number of successful exits. Enki is one of my other directors that's Mongolian. He's a big exploration guy in Mongolia, and we assembled a team here at the onset of the company back in 2017 that really, I think, built us for success. We lacked with the lithium experience, and that's where I added on Mr. Paul Fornazzari as an advisor. He's the original chairman of Lithium Americas, was a director at NEO. Don, being a very technical individual, oversees, designs, and ensures the implementation of our exploration programs on the ground. Dr. Hashbat Eftet-Seren is my scientist on the ground. He's a PhD lithium hydrogeologist and helps sort of not only source new licenses, but ensure that the team on the ground is working up to par with Don's expectations and the team's expectations. And more recently, as about 2 months ago, I added Dr. David Deeks. He's an entrepreneur who's worked in lithium for quite some time, SVP CTO of Lithium Americas in his last role, and prior to that, worked at Tesla as one of the early alumni to help bring Gigafactory 1 online. So really pleased with the team that we've assembled, and we look forward to executing on our exploration initiatives that I will highlight shortly. Bavayol, our flagship license, is only 24 kilometers from the Chinese border. Urgaknaran, our secondary license, is in Dorngovi, a very infrastructure-rich region in Mongolia with the railway into China, as you can see on the map there. So Urgaknaran involves a number of different mining initiatives, rather exploration initiatives, I should say. Planned microseismic, we're going to be drilling in about a month's time, bringing up those brine samples to surface to have them assayed. Those are some images from site. It's relatively green as a result of a bit of a rainy, odd season, if you will, but it is in the Gobi, it is dry, it is arid, so very similar to what you would find in the Lithium Triangle. Just a quick cap table summary here, 60 million shares outstanding, nice and tight, over $5 million in the bank today, with access to about $11.5 million should our warrants convert in the next 2 years, fully capitalizing the company further with no requirements of a financial overhang. Management and insiders hold a big chunk of the company at 25%. We're fully escrowed. We've invested in every level. and we cannot sell, assign, or transfer a share for 2 years. So our market cap today in and around the 23 to 24 million, depending on the day. We also trade on the US OTC market, as well as in Frankfurt under 5YB. So that's where we are with ION. What you can expect from us going forward is obviously results from our exploration programs that will be highlighted and added to market to get a better understanding of our assets. But we have a very, very busy summer and fall ahead of us. So that's all I have to share, Andrew.
Okay, thank you very much for that. I'll start with an open question from the audience, and obviously we encourage other members of the audience to also send in their questions. From Amar Adia of, I think it's the Barra Group, hope I'm pronouncing that correctly. What's the political risk to ION Energy, since the new constitution is very state-centric, while resource nationalism is growing after recent presidential elections?
Great question. The People's Party that has sort of taken over a 70% majority win in country has been extremely supportive of everything that we've done, including Step Gold, which is sort of a sister yet independent company there. The country's very first sovereign wealth fund investment was in Step Gold, and then that was driven primarily by the People's Party. To talk about sort of the political risk, the government of Mongolia, particularly the People's Party, is recognizing that a lot of foreign investors have come into the country, have been able to obtain licenses, have sort of sat on them and not developed them further. And that's where the government said, well, if you're going to sit on these licenses and not do anything with them, then we may look to bring another party in that would ultimately progress that, but so that it adds to the GDP. Our history in country has been very clear. We've with Hunu Coal that Matt started in 2010, he exited in 2011 for $500 million. That paid a vast majority of taxes in the country, but it was 100% employed by Mongolians. So we're actually doing things. With Step Gold, we bought a fully permitted project from Centerra Gold in 2016 that we took public in 2018 and had first gold pour in March 2020 when the world was in a complete lockdown. Commercial production declared in June of last year. With ION Energy, we went public in August of last year, and as of October, we already had work being done on the ground. And as of last month, we have a strong team on the ground already executing on our exploration strategy. So we're not a team that sits back and sort of goes out to market every couple of years just to raise funds. We're a team that gets things done, and the government's a big supporter of that. So we do not see any risk from a political perspective in that regard.
Okay, perhaps I can bring in Chris Berry. Chris, what questions do you have for Ali?
Yeah, I guess maybe kind of a micro question and then just sort of a macro question on the micro side. So, you're recently cashed up. That's great. There's a drill program. I mean, what's the timing, do you think, for some sort of an initial resource?
Resource estimates are still, quite a way out, I would say.
Okay.
What we're looking to do now is ultimately drill on what could be deemed very virgin ground. The 50s, the Russian government, when Mongolia was part of the USSR, did some drilling in Seawater province. They were likely looking for potable water, ended up finding a saline aquifer about 30 meters below surface. The 90s, the Russians and Mongolians revisited, and they found, yes, indeed, it is saline. They tested it for a number of different minerals. But in 2016, when the University of Science and Technology spent some time really trying to get a better sense of how much lithium there was there, they were able to extract brine samples from 2 holes 70 kilometers apart. So not a vast amount of work in that regard, but 426 ppm average grade, 811 max grade, low impurities for sodium, potassium, calcium, and magnesium, drove us to work with the government to give this license up for tender. Now that we've received it, we completed our microseismic, we've completed our geophysics, we've commenced drilling on one of our targets at Bavayol. We've drilled 13 holes there. We have a total program of 21 holes that's ongoing now to really prove out the hypothesis that the Russians and the Mongolians and the university put together some years ago or some decades ago. We're encouraged by our early results. We expect assay results of not only our diamond core rig, but also the brine samples to be turned around in about 3 to 6 weeks from delivery to the various labs in Mongolia. So it is an early stage project. There's no denying that. The fact that work has been done historically that indicates the presence of lithium at grades that could be commercially viable, along with the team that we've assembled that validates our hypothesis and our thought process here, is really what wakes me up each morning to keep at it and keep going at it.
That's great. And then thank you for that. And then just sort of the macro question. I mean, obviously you're right next to China, right? Which is the giant sort of lithium consumer. I mean, this is obviously sort of projecting down the road, but you ultimately you'll have a resource, you'll start to better understand the economics of the project. I mean, it seems like the development strategy for successful juniors to graduate, shall we say, to a development stage is obviously that partnership model, where a larger partner, perhaps with a more robust balance sheet or technical knowledge, comes in, and you enter into a joint venture, a strategic relationship. I mean, would you consider a Chinese partner for something like that, or is it sort of, I mean, are you focused on that part of the world, or sort of anybody else, or just kind of interested in your thoughts there?
Sure, absolutely. I think you hit the nail on the head with your intro when you spoke about sort of new supply chains coming online, with GM doing what they have to do in order to really build the batteries, as opposed to import them from China that produces in excess of 70% of the world's batteries today. But where we are located is quite geopolitically important. Mongolia is sandwiched between Russia and China. So the US has a fantastic relationship with Mongolia, as does Germany, and thus the European Battery Metals Alliance. Those countries have set foot on some lithium projects in Mongolia. And I assume as the world moves towards this more continental supply chain, China sort of left there thinking, can I go to Australia and get my lithium from the hard rock at Greenbushes? Can I go to LATAM and get it from the brines at Albemarle? Mm-hmm. Well, perhaps I want to look at a local supply chain, similar to what Europe is doing with Serbia and Portugal. So what we're seeing from an ION perspective, a macro sort of vision that would talk about strategic alliances, would very much lend itself to the Chinese coming in as a strategic partner at the end of the year for a toeholder of the organization, where they get a ROFR to take this thing to production. At a higher valuation. But let's not forget, that the Taiwanese, the Japanese are all within earshot, as I like to say, and they're battery producers as well. The Koreans, along with Samsung and the rest of them. But if you were to look at sort of anybody else that would like to come on board, perhaps the Indians, and some people may not like what I'm about to say. If Modi didn't screw up their economy, they may have been a real contender to come in here and actually try and do some work in Mongolia. So our focus remains, let's keep our door open. Let's not knock on any strategic doors today. Let's prove out what we believe we have, and then let's engage with them when we have a better understanding of our resource and the quality of the lithium under surface.
Great. Thank you.
I'm bringing in Phil from KWR Capital. What questions or thoughts do you have for Ali?
So lithium is, I'll say lithium isn't really my space. Though of course I will always have a view on it. A question I've got for you here. So when I've been looking at this, the battery metal space, right? And speaking to some of the producers, one of the questions I always have is like, have you had the offtake discussions yet? Who are you going to sell it to?
Yeah, so that's so in line with a bit of what Chris asked, but the offtake agreement, no, and that's for one of two reasons. One, we don't quite understand entirely what we have, and so it's going to be tough for you to get a partner to come in for an offtake agreement at this stage. In terms of actually who will be consuming our product, the Mongolian government and Mongolia as a whole is a country that's been heated and powered very much by coal since the days of the USSR and the Soviet Union. So Mongolia is also looking to put industry in place, and perhaps they, as a government, may partner with us to build batteries in country. It's yet to be determined. But the natural fit, based on our proximity to the largest consumer in the market, along with what they're doing with the One Belt, One Road initiative that essentially has, if you're looking at your screen here, this railway line is being upgraded to ensure that goods and services can trade quite easily. So China being the largest consumer, the likes of Ganfeng, Tianqi, it could be CATL, who's now looking to really get into the supply chain. The numbers are quite vast. It could be Tesla that's now having a significant presence in China as well. So
the problem with that, Ali, I hear you, but at the same time, I mean, I'm very familiar with the politics of monopsony, which is where the customer determines what's happening with the supply chains, and basically all roads will lead to the Chinese here, even if they're not necessarily in China, and if you look at what's happening in the graphite market, where people have actually tried to develop their assets, but then the only people that they can actually sell to are the Chinese, and the Chinese will determine the price on whatever your graphite is going to be. So it's a complex thing. where I get nervous with lithium is when I then see the Australians, and as you mentioned before, the Australians are getting into a big way as well. I've seen like Global Lithium in Australia and a bunch of other people raising money here, and so that says to me there's a lot of supply around, and I'm just not certain in terms of, I know there's demand and demand is increasing, but I'm not certain what prices you'll be able to sell the lithium that you produce.
No, that's a fair question. I think based on the science, and as Chris mentioned, lithium is vastly abundant. I could dig a hole here under my home and potentially find lithium, but in some shape or form, be it clay, be it hard rock, be it, I'm doubtful that I'll find brine, but it could be vastly abundant. But the chemistry of that lithium is where lithium differs from typical mining, say for gold or anything else. When your potassium, magnesium, calcium, and sodium ratios are out of whack, you end up spending far too much money to bring that lithium carbonate to 99.9 purity, or purity that can be used in a vehicle as opposed to a toy that you buy on Amazon. So the chemistry is extremely important, and we're getting there. We're trying to better understand our chemistry. We've seen early chemistry that shows that our brine is of good enough quality that it can get there. But beyond that, I think you have to consider China today is going down to Australia. They are buying a lot of lithium from Australia. They are going to Lithium, and that's my dog. I apologize, probably the mailman. But they're going everywhere else in the world except their neighborhood. And with Thacker Pass in Nevada and the clays in the US coming online to service that continental supply chain, along with Serbia and Portugal servicing Europe, it's inevitable that the Chinese will start to look for local supply. Now, not to say that they don't have lithium, they do. The Qinghai brines are about 3,000 kilometers away from our asset over here, but they're not of any quality that would end up in a vehicle with a 10-year warranty. Let's keep it at that. And they're not going to be cost effective to bring to that quality. The differentiator that we have is the quality and the grade that close to the largest consumer on the planet makes us one that would be difficult for them to ignore once we've done the necessary work to de-risk the asset.
Okay. Thank you very much for that. I think we just really need, in the interest of time, we need to move on to our next presenter. But that really was a fabulous update, Ali. So thank you very much for that. And we obviously do wish you all the best with Ion Energy. Just while we change the slides over, our next presenter is Richard Murphy, 25 years experience as a senior geologist, present CEO of a number of TSX and TSXV listed companies, successfully completed multiple IPOs, financing, acquisitions, and divestitures with these companies. He is now president and CEO of Manitou Gold. Richard, the floor is yours.
Thank you very much, Andrew, and thank you for having me, along with your other esteemed guests. So Manitou Gold, as the name suggests, is a company entirely focused on exploration for and discovery of gold. We're working strictly within Ontario, Canada. Ontario is one of the most coveted mining jurisdictions globally. We've got attractive laws. Actually, mining is very much encouraged, and even at the early stage of exploration. So that's entirely our focus within Ontario, and where we are specifically in sort of central part of Ontario, near the historic mining center of Wawa. There was a major iron mine and smaller scale gold mines around the town of Wawa. So this is on north shore of Lake Superior, one of the Great Lakes in central part of Canada. It's also located adjacent to the Trans-Canada Highway, and the transnational rail lines actually bisect our property. So we're working in a gold belt. It's known as the Michipicoten Gold Belt. There are numerous mining operations currently ongoing. Two of them that are more notable. West Dome is 2 mines in the west end of the belt.
There's a guy who's working in Manabi.
Yep, that's right.
These guys are working in.
Okay, Jim, can I just ask you to mute yourself, please? Well, just read the presentation. Sorry.
Oh, for fuck's sake.
Oh, sorry. Hey, sorry, do you want to just go and continue there?
Yes, yeah. So another operating mine is the Island Gold Mine, owned by Alamos Gold in the central part of the belt. And then the Ranabi mine, which our friend with the parakeet is so fond of, as a past producing mine owned by Barrick Gold. That's a 1 million plus ounce producer. So I mentioned Alamos Gold. It's a $4 billion Canadian mid-tier gold mining company. They actually have taken an interest, 19.99% ownership in Manitou Gold. We've got a second strategic owner in the company, that's O3 Mining, which is part of the Osisko group of companies, prolific explorers, mine developers, also collectively worth many billions of dollars. They own 9.999% of Manitou Gold. So for a collective 30% interest from two strategic owners. Our management group is deeply involved. Myself and some of my colleagues own another 15% of the stock. Similar to Ion Energy, actually, we've got about a $23 million market cap. Currently, we've got about a $5 million cash position in the treasury. We're fully funded for what it is we want to get done in the remainder of this year, and funded actually into the first quarter of next. And that's really a lot of drilling. So we've completed the consolidation, started in 2017. Just this morning, we announced we've fully vested in the last large part of our property at 100% basis. So now we are an unencumbered 100% owner in a 350 square kilometer piece of a greenstone belt between multi-million ounce deposits. The largest mine owner in the area owns 20% of us. And we not only have a passive interest with that group and a passive relationship, but very active with the technical group that participates with us, their VP Exploration. I count them as a friend, and they provide a lot of insight and input. Since they bought the Island Gold mine property back in 2017, they've spent literally many tens of millions on exploration. So they've come a long way along a learning curve, and they provide a tremendous amount of help for us. It's just a property map, again, bookended between the past producing Ranabi mine and the sort of crown jewel of Alamos, the Island Gold mine. You're looking at approximately a 60-kilometer trend across here, and all the lands in brown color would be owned by Alamos. They purchased this again 2017 for a price of just under $1 billion. And here we sit next to them, adjacent to their lands, with a 21 million market cap and 5 million in cash. So what, aside from the land ownership, something really salient on this map is we've put on the location of a couple of these key deformation zones that really host and can host these world-class deposits. So one, the Goudreau-Lacache deformation zone, largely owned by Alamos entirely. They've taken that from 1.5 million ounce resource and reserve when they bought it 4 years ago, up to 4 million ounces now. Adjacent to them, a company called Argonaut Gold has got a multi-million-dollar open pit deposit they're developing. So this Goudreau-Lacache, I mean, you can easily see how this can become a 10 million ounce host. So this is putting itself on the scale as a world-class mining jurisdiction. On the other side of this Thake fault, which sort of truncates that Goudreau-Lacache deformation zone, it's offset to the north, now called the Baltimore deformation zone. Until we were successful in consolidating all of this in the last several years, it was very fragmented and untested. I mean, that Goudreau-Lacache deformation zone, largely since the 80s, has seen well over 1 million meters of diamond drilling for gold. And we can contrast that with our Baltimore deformation zone, 18 kilometers long, with 4,000 meters of historic drilling in it, largely towards the eastern end. So this is our focus now. We're literally just a few weeks away from completing our targeting work on the western 10-kilometer piece of that Baltimore Deformation Zone. Early in the year, we'd announced a 10,000 meter diamond drilling campaign to drill in the Baltimore Deformation Zone. When we started to see what some of the targets were looking like here, we much more recently announced we were tripling the size of that drilling program to 30,000 meters. Again, it's all paid. The Treasury's in place to undertake all that work. And we're just in the short strokes of finishing off the targeting. And I expect that by this time next month, we'll have a drill moving in here. The drill's actually on the property. We'll be moving on to the first of several targets that are taking shape here.
Okay.
So,
sorry, just having to squeeze this, like, interject the question here, because you mentioned obviously about Alamos Gold. Would you consider joint ventures or investments with other companies in the area?
So we've got the two strategics already in place. We, I don't want to say we would slam the door. Money's money, and when you need it, you talk to who has it. But certainly we enjoy a good relationship with both our strategic owners right now. There are other companies. I mean, when you look at, I mentioned this Goudreau La Calche Deformation Zone looking like it's got an earmark for, maybe 10 million ounces of gold. Well, I don't see why we couldn't have multiple million ounces of gold in the Baltimore Deformation Zone. So I don't think it's incomprehensible that there are other mid-tier or even major gold companies out there looking and sort of weighing opportunities. So I'd say our door is open for future opportunities.
Okay. And then just bringing in Phil from KWR Capital, I assume that this area is very, very familiar to you. What questions would you have for Richard?
A couple of that. So when it comes to drilling, Richard, where are you with your current status of drilling? Have you actually started yet?
We drilled in the first quarter of this year on that Baltimore Deformation Zone. We did deploy about 10,000 meters of drilling towards the eastern end, the very far east end. We drilled something we named the Stover Zone. It was a proof of concept, sort of a technical success. We drilled this thing off from surface down to 500 meters. We're typically getting mineralized widths of 25 to 50 meters true thicknesses and grades of 0.7 to 1 gram per ton gold.
Yeah.
That's
that's good, right? So let me then ask you a question there, Richard. So this is good. You've got some great strategic investors. As you pointed out, you're actually in a great area. Okay. Ontario, we like Ontario. The political risk is, except for, I won't go into politics, but the political risk is minimal. You've got some great strategic investors, all the rest, and yet you stand at $23 million as market capitalization, right? Why is that? I mean, I look at that story and I think this is great, and you've done all this drilling as well, so you're proving it as well. It's a mineral-rich area. I'm sure we could both point to other companies who actually have market capitalizations with a less attractive deposit, which is, several $100 million. What are your thoughts on that, Richard?
Well, I got to say, it's been a long sort of 3.5 years of putting together the consolidated land package, doing the boots on the ground work. It's not that exciting, geophysical work, targeting. And as a result of where we've come from, basically assembling this, doing the technical work to position us to kick off this major drill campaign. This was a drop in the bucket, what we did down in the east, and what we're going to kick off here in the next month on the bigger piece of the Baltimore Deformation Zone. I really think that's going to give us the opportunity for a re-rating. In my experience, usually, these re-ratings happen pretty quickly. It takes a little bit of a market leader, recognize something that's of deep value, and these re-ratings happen very, very quickly once you have a leadership buyer.
Yeah.
Okay.
It's a good story, and I can see you're going to make a Cisco very happy one day, or Alamos.
Well, as they say, they both see deep value, and I think a lot of wealth is going to be created here. They both participated in an earlier panel today and stated those words exactly.
Yeah, it's it would be sort of like hard put to find two better sort of like supporters than Alamos and Cisco. I'm bringing in Chris Berry. Chris, what questions or thoughts do you have for Richard?
None from me right now. I'll be honest, it's been a long time since I looked at a gold project, but it looks really, really promising. So congrats on all the success and good luck.
Well, thank you very much. You just got to remember, gold is money. One of the meetings I had earlier today, somebody asked, what's the use of the product? And I said, well, gold is money. That's it. You can do many different things with it, obviously, high-grade electronics, et cetera, jewelry, but ultimately for the last several thousand years, gold has been a store of value. I don't see that changing.
Just in terms of, we've got about 5 minutes left, and just got like a common question. I'm just quite keen to ask each of the four panelists. I think it's okay, Richard. You can probably just take down the sort of screen sort of sharing now. I just want to kind of go to like a final sort of question, which I think that Phil touched on earlier. We talked a bit about technology. I'm just interested, just going around robin around the panelists, if they had to name one innovation in exploration technology that they think is going to change the exploration landscape over the next 5 years, what would they pick? I'm going to stay with you, Richard, first. What would your answer be?
So I'll answer with respect to gold exploration and the technology that some of which we've adopted. There are people going with high resolution mag with airborne drones, and with magnetics in particular, the further you are from the source bedrock, the magnetic signal attenuates or diminishes very, very quickly. What we're doing is high resolution on the ground, guys literally crashing through the bush at tightly spaced lines. And that gives you so much more resolution. It's sort of old school, but we're doing it in a way that, very, very sensitive equipment. And the other thing that we're using, it's very new, it's a type of IP or induced polarization survey. We're actually extending these lines out 3 to 4 kilometers at a time. So instead of getting like a 50 to 80 meter depth slice, we're literally looking down 800 to 1,000 meters, and we're able to that way interpret these deep-seated structures that are the key controls on gold deposits.
And Ali from Ion Energy, what would your answer be?
I'd echo the drones, but for the lithium brine space, or rather for the traditional mining space, XRF guns have always been in use that will allow you to determine the makeup of say, a rock chip sample on site when you're on the ground. That technology existed very briefly for lithium brines, and it seems to be making a resurgence now using argon gas. So as that happens, I think for us lithium brine explorers, it'll help diminish our costs or even our time to get results, because we will be able to scan our brine on site, and you're drilling a dud, you move on to the next hole. So I think that'll be invaluable as that technology starts to improve.
And what exploration technology would you pick, Chris?
I'm not sure about exploration technology, but just maybe sticking with lithium on the processing side. You're seeing a lot of innovation in the last few years on, taking multiple feedstocks, whether or not it's brine or hard rock or perhaps ultimately clay, and really picking and choosing your end lithium chemical, whether or not it's carbonate or hydroxide. Those are the two, I think, biggest for the battery business. I mean, as the industry sort of exists today, if you're producing, if you have a brine project, really you're sort of limited in the sense that your end product is lithium carbonate. There's a fair amount of innovation happening right now to allow a brine processor to go directly into hydroxide, which a lot of people think will be the higher demand or more demanded of the two lithium chemicals throughout the decade. So I'm pretty interested in lithium processing technology, actually just sort of a step beyond exploration.
Okay, and lastly, let me just return to Phil Hopwood. I think you mentioned technology.
I'll give you one. I'll give you a technology there, Andrew. Yep. You want a technology from me as well?
Yes.
So, as an investor, I would be remiss if I didn't mention artificial intelligence. You know, the ability to sort through the data. And, you know, at the moment you've got the Sidar.com. Emily King would kill me if I didn't mention that she's been doing with Prospector Portal. But, you know, that ability to sort through data and crunch the data, and rather than going to Sidar.com and look for the 43 101s individually, you can kind of crunch through that with things like Prospector Portal. That's exactly what you want. So it's access to data and the quick sorting through the data to be able to evaluate projects is what I want.
Isn't the cost of artificial intelligence beyond, like, kind of like, I mean, isn't artificial intelligence and buying it kind of too costly for some of these junior exploration companies, or is the cost coming down?
Well, not in some of how it's been used. I've actually seen artificial intelligence, for example, being used by some of these smaller producing mining companies in terms of maintenance work. Yeah, chatbots, you know, things like that's Oceana Gold in Australia. They've done some interesting work in that area. But I got to tell you, ability to crunch through data and to move away, disrupt some of those older sources of data, you know, that's exactly what I want.
Okay, excellent. Well, look, I think that brings us up to the sort of like, I think that brings us up to sort of the 50-minute mark and brings us up to the end of this sort of 5 at 5 show. So I think on that note, I'd just like to thank our 2 investor guests, Phil Hopwood and Chris Berry. I'd like to thank our two miners, Richard of Manitou Gold and Ali of Iron Energy, and also to our media partners, Resource Global Network. See you at our next 5 at 5 or one of our future sessions at our online June event. Until then, stay safe. Thank you very much. Bye-bye.
Thank you.
Bye.
Thank you. Thanks very much.
Bye-bye.